Hello and welcome back to this channel. A complete guide to single candlestick pattern trading video you will ever need. Candlestick pattern is the most important step to understand when trading in any financial market. To become a profitable trader, you need to build up a solid foundation and clear understanding about the psychology of candlestick and candlestick pattern. In this video, I'm going to share with you all you need to know about candlestick and candlestick formation. A single candlestick pattern or chart formation made of only one candle to display the price information for traders to make their decision to enter the trade. Some of the most common single candlestick patterns are Marubozu, hammer and inverted hammer, shooting star and hanging man, and also dojis. But before I show you how you trade with these candlestick pattern, I am going to share with you schematically how does a bullish and bearish candlestick form. How does a bearish and bullish hammer candlestick form? And finally, how does a bullish and bearish shooting star candlestick form? So after this, you will have a clear understanding the psychology and formation behind candlestick pattern through open, close, high, low, and upper and lower shadows. Let's have the first example. How does a bullish candlestick form? Let's assume this is an empty candle. In the morning, when the market opens, the price opened right here. And the price, if it goes up, it will show with the green color. If the price goes down, it will show with the red color. Now, the price going down, this is the presence of sellers in the market. And again, the sellers push the price down again. And again, it got rejected by the buyers. So the buyers pushed the price higher where it started, where the candle opens, and it left a lower shadow representing the presence of buyers in the market. And this is the lowest price for today. The buyers push the price up and up again. And it will go up, so the buyers are very strong. And again, it got rejected by the sellers. And the sellers pushed the price down again. And the candle closes here because the market closed. And it left an upper shadow representing the presence of sellers in the market. And this is the highest price for the duration of this candle. And this is a strong bullish candle. Now, how does a bearish candlestick form? Let's assume this is the same empty candle. The market opens right here in the morning and the price go up because of the presence of buyers in the market. And again, it got rejected by the sellers. The sellers pushed the price down and it left an upper shadow here representing the presence of sellers in the market. And this is the highest price for this candle. Now the presence of sellers are so strong, the sellers push the price down and down again and again. And finally it gets rejected by the buyers. The buyers didn't want this lower price. And again, the buyers push the price up and the market closes at this point and the candle closed. It left a lower shadow representing the presence of buyers in the market, and this is the lowest price for the duration of this candle. This is a strong bearish candle. The first single candlestick pattern I'm going to introduce is bullish and bearish Marubozu. Bullish and bearish Marubozu can be seen in three different configurations, and the first one is bullish and bearish full type Marubozu. This is A bullish full type Marubozu, it's a long and strong single candle with flat top and flat bottom, no upper and lower shadow at all. In this candle, close is equal to high and open is equal to low. This candle has a unique pattern, easy to spot with a clear meaning. Bullish, no sellers are in the market. There are so much buying pressure in the market and the buyers would like to buy share at whatever price during the session or time frame. Hence, traders should look for buying opportunity as the next bullish candle passes the close price of the prior candle and go long. This is a bearish full type Marubozu. It's a long and strong single candlestick with flat top and flat bottom, no upper and lower shadow at all. In this candle, open is equal to high and close is equal to low. This candle has a unique pattern also, easy to spot with a clear meaning. Bearish, no buyers are in the market. There are so much selling pressure in the market and the sellers would like to sell their share at whatever price during this session or time frame. Hence, traders should look for selling opportunity as the next bearish candle drop below the close price of the prior candle and go short. The second type is bullish and bearish open type Marubozu. This is bullish open type Marubozu. It's a long and strong single candlestick with flat bottom, no lower shadow. Here open and low are at the same place. There is some retracement or upper shadow at the close price. This is an indication the presence of sellers in the market, and this is the highest price for the duration of this candle. The strong bullish open type Marubozu indicates the buyers has a strong power and traders should look for buying opportunity to go long. This is the bearish open type Marubozu. It's a long and strong single candlestick with a flat top, no upper shadow. Here open and high are at the same place. There is some retracement at or lower shadows at the close price. This is an indication the presence of buyers in the market, and this is the lowest price for the duration of this candle. The strong bearish open type Marubozu indicates the sellers has a strong power and traders should look for selling opportunity to go short. Finally, the last one is bullish and bearish close type Marubozu. This is bullish close type Marubozu. It's a long and strong single candlestick with a flat top, no upper shadow. Here close and high are in the same place. There's some retracement or lower shadows at the open price. This is an indication of the presence of sellers in the market, and this is the lowest price for the duration of the candle. The bullish close type Marubozu indicate the buyers has a strong power and the traders should look for buying opportunity to go long. This is bearish close type Marubozu. It's a long and strong single candlestick with flat bottom, no lower shadow. Here close and low are at the same place. There is some retracement or lower shadows at the open price. This is an indication of the presence of the buyers in the market, and this is the highest price for the duration of the candle. The bearish close type Marubozu indicates the sellers has a strong power and traders should look for selling opportunity to go short. What is the best location you can trade with Marubozu candlestick? If a bullish Marubozu appear at the bottom of a downtrend, trend reversal is likely. If a bullish Marubozu appear at the end of an uptrend, trend continuation is likely. If a bearish Marubozu appear at the end of an uptrend, trend reversal is likely. And finally, if a bearish Marubozu appear at the bottom of a downtrend, trend continuation is likely. Let's have an example. How to trade using single candlestick Marubozu. This is the price trend SU stock D1 time frame of finance. The price is originally going downward toward the bottom of a downtrend and then reverses back going upward. Now at the top of this downtrend, you see a close type Marubozu followed by another bearish candle which closes below the close price of this candle. So traders can exit the market right here and put their stop loss 1 or 2 ATR above the high of this bearish candle. Now the trend is going downward. This is again open type bearish Marubozu as a continuation pattern. The trend is continuing going downward, and you see at the bottom of a downtrend, you see this hammer. That's the sign of bullishness. So it means the bearish power is coming almost to end. And this is again a long leg doji, a sign of indecision, followed by this big, huge, bullish close type Marubozu. That is the sign of reversal, or the reversal is more likely. So traders could enter the market as soon as this candle passes the close price of this bullish candle, and they can enter the market right there and put their stop loss 1 or 2 ATR below the low of this Marubozu. The trend is going upward. You see this open type Marubozu as a sign of continuation. This is a close type, again, close type Marubozu as a sign of continuation. So the trend is basically going strongly upward. So you see this bullish or bearish type Marubozu, trader can use to enter or exit the trade and make a successful trade. In this graph, I'm going to show you how does a bullish candlestick hammer is formed. Let's assume this is an empty candle and the price open in the morning here where the market opens. The sellers start pushing the price lower, lower all the way till here, and then this lower price was rejected by the buyers, strong buyers in the market that pushed the price higher all the way till here where the price opened in the morning, left a lower shadow representing the strong power of buyers in the market. And this is the lowest price for the duration of this candle. The buyers pushing the price higher again all the way here, and then it got rejected by the sellers. The market closed at this point, leaving an upper shadow representing a small presence of sellers in the market. And this is the highest price for the duration of this candle. So you see this candle, which is bullish right now, has a strong bullish power. And now I'm going to show you how does a bearish candlestick hammer form. This is again the same empty candles and the price open here, and this time the buyers pushing the price up, and then it got rejected by the sellers and leaving an upper shadow representing the small presence of sellers in the market, and this is the highest price for the duration of this candle. The sellers continue pushing the price lower and lower all the way to the end, but since the power of bullish is so much in the market, the bullish reject the lower price and start pushing the price higher and higher all the way up here. The candle closes here and left a lower shadow representing the big power, the big bullish power, and this is the lowest price for the duration of the candle. So you see, although the color is red, but the power of this candle is bullish. So we conclude that a hammer is a single candlestick pattern with long lower shadow and a short body. If this candle, no difference bullish or bearish, appear at the bottom of a downtrend, signaling that the downtrend is near the end and possible uptrend reversal. As you see, when the market opened, sellers began to control the market and continue pushing the price lower, but soon after the buyer reject the lower price and push the price strongly back up toward the open price before the session closes. So that is the psychology behind the candlestick hammer. In this graph, I'm going to show you how a bullish shooting star form. Let's assume this is an empty candle and the price open right here when the market opens. First, the sellers pushing the price down, and it immediately this lower price is rejected by the buyers, and the buyers push back the price where it started in the morning, left a lower shadow representing a weak presence of buyers in the market, and this is the lowest price for the duration of this candle. The buyers continue pushing the price higher and higher all the way till here, and then this high price got rejected by the presence of strong sellers in the market, and the sellers pushed the price lower and lower all the way till here. The candle closes right here, left an upper shadow representing a strong presence of sellers in the market, and this is the highest price for the duration of this candle. So although this candle, the color of this candle is green, is bullish, but this candle has a huge bearish power. Now I'm going to show you here how does a bearish shooting star is formed. Let's assume this is an empty candle and the price opened right here when the market opens. Here in this candle, first the buyers pushing the price up and up all the way till here, and then because of the strong presence of selling pressure, the sellers reject the higher price and push the price back down and bring the price lower all the way till here where the price opened in the morning. It left an upper shadow representing a huge selling price in the market, and this is the highest price for the duration of this candle. The sellers pushing again the price lower up to here, and then again it got rejected by the small presence of buying or buyers in the market. The candle closes here. It left a lower shadow representing a weak presence of buying or buyers in the market. And this is the lowest price for the duration of this candle. Here we conclude that a shooting star is a candlestick pattern with a long upper shadow and a short body. If this candle, no matter bullish or bearish, appears at the top of an uptrend, signifying that an uptrend is near end, or we have a possible downtrend reversal. As you see, when the market opens, buyers begin to control the market and continue pushing the price higher. But the short body means the sellers reject the higher price, push the price down toward the open price before the session close. This is the psychology of bullish and bearish shooting star. That is, in both cases, the sellers are in control of the market. Excellent tips nobody tell you. How do you know the pin bar is bullish or bearish regardless of the color? Let's assume all these pin bars are at the same length. If the body of all these pin bars lies below the midsection of the total length, you can consider all these pin bar as bearish pin bar regardless of the color, or you can consider it as shooting star. Let's assume these are all pin bar at the same length. If the body of all these pin bars lies above the midsection of the total length, you can consider all of them as bullish pin bar regardless of the color, or you can consider it as a strong hammer. Isn't it amazing? Another excellent tip nobody tell you. How do you know the pin bar is bullish or bearish regardless of the color? Let's assume these are all pin bar with the same length. We use Fibonacci retracement tool in such a way that the 0 be on the high of this pin bar and 100% be on the low of this pin bar. Now, if the body of this candle be between 0 and 38.2%, then we consider these pin bar as bullish pin bar or a strong hammer regardless of the color. Let's assume these are again some pin bars with the same length. Again, we use the Fibonacci retracement tool in such a way that 100% be on the high of this pin bar and 0 be on the low of this pin bar. Now, if the body of this candle be below 38.2% in Fibonacci tools, we consider these pin bar as bearish pin bar or a strong shooting star regardless of the color. Isn't it amazing? How to trade hammer and shooting star. This is the price trend case stock D1 time frame of finance. In this graph, you see the price is trending nicely upward, making higher swing high, higher swing low, higher swing high, higher swing low, higher swing high. That's the characteristics of a strong uptrend. Now at the top of this uptrend, you see a big and a strong shooting star that is characterized as a strong bearish power, or the presence of a strong presence of sellers in the market. Now, here we can conclude that this uptrend is slowing down or near end, or the price is reversing. So we have to wait for the next candle. If the next candle passes the close price or drop down below the close price of this candle, then we can exit the market right there and put our stop loss maybe 1 or 2 ATR above the high of this shooting star. Now again, and here we have at the bottom of it this small downtrend. We have this bearish hammer. The color is not important. It characterized as a strong bullish power. So it means this uptrend is slowing down or near end, and the trend may reverse, or the reversal is more likely. Now, traders should look for the next candle. As soon as the next candle passes the close price of this hammer, they can exit the market, enter the market, and put their stop loss maybe 1 or 2 ATR below the low of this hammer. So that is how we can trade hammer and shooting star. So afterward, you see the trend is going up here, and also here with the shooting star, the trend is going sharply down. I always advise my student to incorporate other technical mean or price action with these pin bar to double check the entry and exit point. This way you minimize the loose trade. Finally, the last one is Doji single candlestick pattern. In general, we have 5 different Doji candlestick, and the first one is Doji star. Doji star has a cross shape, and the open and close price are at the same place. It also have a small and equal upper and lower shadow. Doji star characterized as low volatility and indecision in the market, and the power between buyers and sellers are equal. The second one is long leg doji. In long leg doji candlestick, the open and close are again at the same place. It has an extended upper and lower shadow, meaning the greater volatility and indecision in the market compared to doji star. The price may fluctuate more, but at the end of the candle session, the price closes at the same place where the market opened, meaning the power between buyers and sellers are equal. The third one is a gravestone doji. In this gravestone doji, open, close, and low are at the same place. The price open here, as you see in the graph, and the buyers push the price all the way up here, and this is the highest price for the duration of this candle. And then, because of the strong presence of sellers in the market, the higher price is rejected by the sellers, and the sellers push the price down all the way where the price opened. This candle has a strong bearish power. So if you see this candle at the top of an uptrend, it suggests the uptrend is coming to end or downtrend reversal. The fourth one is dragonfly doji. In this dragonfly doji, open, close, and high are at the same place. The price open here, as you see in the graph, and the seller pushed the price down all the way here, and this is the lowest price for the duration of this candle. And then, because of the strong presence of buyers in the market, the lower price is rejected by the buyers, and the buyers push the price up all the way where the price opened. This candle has a strong bullish power, so if you see this candle at the bottom of a downtrend, it suggests a downtrend reversal, or the uptrend is coming to end. Finally, the fifth one is 4 price doji. In this 4 price doji, open, close, high, and low are at the same place or at the same level. This is a unique pattern signifying an ultimate indecision and zero volatility in the market. The buyers and sellers shows no appetite to participate in the market. How to trade with Doji single candlestick pattern. This is Tesla stock H1 time frame. In this graph, you see the trend is coming downward here and suddenly have a big jump upward, and here you see a shooting star, or you can still call it gravestone doji, and this pin bar has very strong bearish power, the presence of sellers in the market, so that is the reason it is slow down this uptrend, or it may reverse this trend. So we have to wait for this confirmation candle. As soon as this confirmation candle passes the close price or the low price of this candle, you can exit the market and put your stop loss maybe 1 or 2 ATR above the high of this doji. Now the trend is coming down, and you see here is it's the doji star. That's a sign of low volatility and indecision. So it slowed down this sharp downtrend, and at the end of this downtrend, you see two long leg doji, one after another. That is the sign of low volatility here and high volatility in this one, but both of them has a indecision. Buyers and sellers cannot decide what to do. And then again followed by this doji star. When three of them, that's a sign of indecision. So it gives traders a hint that there is going to be a very strong breakout on the way. So you see the next candle, it opens right here and way up. So as soon as the trend passes the high of this pin bar or doji, then traders should enter the trade and put their stop loss maybe 1 or 2 ATR below this low of this doji, of this long leg doji. The trend is going to go up sharply, and here again at the bottom of this downtrend, you see a doji star, sign of indecision, low volatility, followed by this dragonfly doji, and so this one has a strong bullish power. Traders should wait for the next candle to see what happened, and this long bullish candle, as soon as this long bullish candle passes the high of this doji, you can enter the trade and put your stop loss 1 or 2 ATR below the low of this doji, and you see after that the trend is going sharply upward. So we conclude that dojis can give traders valuable information to make a profitable trading decision. I always suggest traders to incorporate other technical analysis, price action, or indicators to double check your entry to maximize your profit. I hope you enjoyed this video. I wish all of you a good luck, and please don't forget to smash that subscriber button. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.